In the world of finance, there is this constant battle being fought. And no, it's not just bulls versus bears. It's a clash between two completely different philosophies, the lightning fast world of the trader against the slow, steady endurance of the long-term investor. So who actually comes out on top? Let's get into it. And this quote, I think it just hits the nail on the head. It perfectly captures the whole conflict. We're all bombarded with these images of traders making fortunes in a split second, right? But what if the real secret to building wealth is the complete opposite? What if it's all about having the discipline to just sit still? And that really brings us to the core question of this entire explainer. When all the dust settles in this quiet war between speed and patience, who is actually left standing on top of the pile of money? We're going to follow the evidence and find out. Okay, so before we can crown a champion, we've got to know who's in the ring, right? It's time for the tale of the tape. In this corner, we have the trader, and in the other corner, the long-term investor. What's so fascinating here is that this isn't just about different tactics. It's about two fundamentally different ways of seeing the world. You've got the trader, who's living minute to minute, trying to surf the chaotic waves of the market. And then you have the investor, who's pretty much playing a different sport altogether, thinking in years, sometimes decades, and just patiently holding on, trusting in the long-term journey. All right, look, philosophies are one thing, but at the end of the day, money talks. So let's get to the main event. Let's look at the cold, hard data. What do the numbers actually say about who wins this fight? So let's start with our baseline. This is the power of patience right here. This number, 9.8%, that's the average return you would have gotten every single year just by putting your money in the S&P 500 for 2 decades and then doing absolutely nothing. To put that in perspective, a $10,000 investment would have turned into more than $65,000. That's your reward for simply staying in the game. And this chart is where it gets really crazy. This shows the massive penalty you pay for trying to be clever, for trying to time the market. If you missed just the 10 best trading days in those 20 years, your return gets chopped almost in half. And if you missed the 30 best days, forget about it. Your gains are pretty much gone. You're barely keeping up with inflation. That is a devastating price to pay for trying to be a sprinter. So you're probably asking, why? Why is it so punishing? Well, here's the kicker. Almost all of the market's gains, we're talking 95% of them, are crammed into an incredibly tiny number of days, just over 1% of the time. The odds of you successfully predicting which few days those are going to be, they're basically zero. And here's the real psychological trap. Our own brains are wired to work against us. See, these huge market-making days, they often happen right after the scariest, ugliest sell-offs. The exact moments when every fiber of your being is screaming, sell, get out. So what do people do? They panic, they sell, and they lock in their losses right before the biggest bounce backs. It's brutal. So the data tells a pretty powerful story, doesn't it? But hey, let's not just stop there. Let's see if this story lines up with the wisdom from the people who've actually conquered the markets for decades. I mean, you can't have this conversation without bringing up the man himself, Warren Buffett. His entire fortune, literally his entire life's work, is a massive monument to this one idea. It's not about being a genius who predicts the future. It's about buying good stuff and then letting the unbelievable magic of compound interest do the heavy lifting for you. And his brilliant partner, the late great Charlie Munger, he put it another way. He said the real edge in this game isn't how smart you are, it's your temperament. It's the ability to be patient when everyone else is freaking out, to be disciplined when everyone else is gambling. That, he said, is the real superpower. Okay, I can hear you thinking it. That's all well and good for the stock market, but what about crypto? What about the wild west of finance? Surely in a market that crazy, you've got to be fast, right? Well, let's put this whole theory to the ultimate stress test. You'd think the opposite would be true, but actually, this principle is arguably even more critical in crypto. The volatility is just off the charts, which makes trying to time the tops and bottoms pretty much impossible. For instance, some of Bitcoin's biggest single-day rallies have happened immediately after huge crashes. If you're on the sidelines for just a couple of those days, it can be the difference between a massive win and a heartbreaking loss. Time in the market is your armor against that chaos. All right, we've looked at the hard numbers, we've listened to the legends, we've even put it through the crypto stress test. So, where do we land? It's time for the final verdict in this matchup, the marathoner versus the sprinter. And when you lay it all out like this, side by side, the picture becomes so clear. The trader is chasing that adrenaline rush of a quick win, but they're dealing with massive stress and, frankly, a very high chance of failure. Meanwhile, the long-term investor is harnessing these incredibly powerful forces, compounding, discipline, which, as the evidence shows, is just a way, way more reliable path to building real wealth. Now look, this doesn't mean it has to be all or nothing. A really sensible path for a lot of people could be a kind of hybrid approach. You build the foundation of your financial future with a solid, long-term core portfolio. Then, if you've got that itch to scratch, you can take a small, separate chunk of money, play money if you will, and use that for some short-term trades. You can have a little fun knowing your serious money is safe. But really, if you only take one single thing away from all of this, let it be this metaphor. In the long journey of building wealth, the consistent, steady pace of the marathoner almost always beats the frantic, exhausting bursts of the sprinter. So I'm going to leave you with one final question, and I want you to be really honest with yourself. Take a good look at your strategy. Are you playing a short game, trying to build wealth for the next minute? Or are you playing the long game, building for the next decade? Because the answer to that question is going to define your entire financial future.